Well, good morning and welcome to October's edition of The Box. The Box is Mills & Reeve's webinar series for insurance brokers, intermediaries and their insurers. And this morning we're going to be talking about MGA product development and taking a look at CFC's new transaction liability product with CFC's head of transaction liability, Guss Marshall. Good morning, Guss.
Good morning, James. Thanks for having me.
Absolute pleasure, and thanks for sparing the time to talk to us today. So we're going to explore how MGAs put together new products, and we're going to do it by shining a light on your new transaction liability product. Guss, could you kick off by just giving us a little bit of background to how you come to your role at CFC, and for those in the audience that aren't aware of CFC or know CFC very well, just a little bit of an explanation about CFC's business and what CFC is.
Sure. So I have been in the transaction liability insurance market now for pretty much 10 years. And prior to me joining the insurance market, I was a M&A attorney at Norton Rose Fulbright in Sydney, advising corporates and private equity investors on M&A transactions, but also relevantly advising M&A or transaction liability insurance underwriters in the Asia Pacific region, including AIG. And from there, I ended up on secondment at AIG in Sydney. One thing led to another, and I moved to London in about 2013 and ended up running their emerging markets M&A insurance portfolio. And then from there was head of M&A for the UK and London market. And I joined CFC about 2 years ago. And a little bit about CFC. So CFC is a insurance company, and we underwrite on behalf of various insurance syndicates at Lloyd's of London, insurance companies, and also, interestingly, our own Lloyd's syndicate, which is a rather innovative contribution to the insurance ecosystem and certainly our business. And that was about 2 years ago that I joined CFC to run their transaction liability business. CFC, probably best known for cyber insurance, certainly a pioneer of cyber insurance. The firm is about 20 years old. And the growth has been rapid, especially over the last 5 years, with transaction liability featuring amongst that growth. And I think what's interesting is for our new SME transaction liability product, and we can get onto what exactly is transaction liability, but for our new transaction liability private enterprise product, it's got lots of great features, but I think for me personally, one of the nice things about it is that it's a nice complement to the rest of our SME business at CFC. We've got a very large SME portfolio for cyber, for instance, and to be able to offer a complementary product on the TL side of the house, I think was an important thing for us to do.
Sure. And you said going to get on to what is transaction liability cover. Here's your moment, Guss. What is transaction liability cover?
So there's various terms that I think can make it somewhat confusing, but the key product in transaction liability is called warranty and indemnity insurance. That can insure either the seller or the buyer, but pretty much these days, mostly the buyer, for any loss in connection with a breach of a warranty given by a seller to a buyer in a private M&A transaction. Those warranties are very customary in a M&A transaction, and they're basically promises about the company that the buyer is buying that are made by the seller. So for instance, the seller might say to the buyer, I hereby warrant to you that there is no active litigation involving the target company, and I own all title to the shares in the company that I'm selling to you, free and clear of any encumbrances, and so on and so forth. They're usually the most keenly negotiated part of a share purchase agreement, which is the name for the contract relating to the acquisition of a company. And the reason why this product has been so successful is because if you're selling a company, you want to maximize its sale price. And in order to do so, the buyer wants a full suite of protection against any liability issues that they may inherit as a result of buying the company. But as a seller, and particularly if you're a financial seller, i.e. a private equity firm or some such, you want to sell it, but you need to return your funds to your shareholders and your investors. And so you can't have this outstanding potential liability on your books for a period of up to 7 years. And after that, then release those funds back to your investors. Insurance allows you to give a full suite of warranties without the corresponding liability contingency that is often required when giving those warranties. So you could, as a seller, require the buyer to take out insurance, give the warranties, which are buyer friendly, and have them capped to £1. And the reason why the buyer is willing to accept it is because they have an insurance policy in place. And if there was ever any issue, the buyer would go directly against the insurer and not have to make a claim against the seller.
Great. That's a really helpful explanation for people. So, Guss, thinking about an MGA like CFC deciding to embark on the development of a new product, how does that come about? Is it looking at your portfolio of existing products and seeing a gap that needs to be filled? Is it conversations with capacity providers that trigger the idea and start the ball rolling? How does it kick off?
So obviously capacity providers are pretty fundamental to product development, but typically it would start by the underwriters who are in the market, talking with brokers, looking at deals, talking with insureds and private equity investors in the case of transaction liability, and identifying a gap in the market. Now, to be candid, this was a pretty obvious gap. The SME market in the US, it represents, by our estimations, about $8 billion of gross annual premiums for an SME transaction liability product. It's certainly not the largest part of the global M&A market by total value of deals done, but it is by far the largest part of the M&A market by number of deals done. So, it's deals versus deal count versus value. And to date, transaction liability insurance market did not have a response to that end of the market. We had a bit of downtime over COVID when that kicked off, and given CFC's SME focus, the directors of CFC, and in particular Dave Walsh, really encouraged me to try and solve this question that was such a big opportunity, but no one had really bothered to try and figure out. And we spent, it was probably about 10 or 11 months sort of ideating what this product would look like. And I think, the important thing that I would convey as a result of my experience with going through this journey would be underwriters are prone to trying to create a product that's from an underwriting perspective, perfect. And I was certainly guilty of that at the outset. What ended up happening was, let's start with what's a perfect product for the end user, for the insured and the broker, and then work back from that to a coverage position and a product theory that can be credible from a profitability standpoint. And that's certainly what we've done, and the response thus far has been wonderful. We've bound far more policies than we were anticipating at such an early stage of the product. And what's been so interesting has been, we've got a great relationship with global M&A brokers, but a lot of the broker uptake for private enterprise has been from national and international brokers who just really aren't that active in the global transaction liability market. So they now have a product that's relevant for their clients that they didn't have access to before because it just frankly didn't exist.
Sure. I'll move on to distribution more fully in a moment. It's in terms of your capacity. Are you able to tell me who your capacity provider is for this product?
Yeah, it's a consortium of Lloyd's, predominantly Lloyd's syndicates, including our own CFC syndicate, and it's led by Travelers Syndicate, who are a phenomenal supporter of ours in the TL business. And their involvement in the product development process was really quite central. We went through a process that ended up going all the way to the Chief Underwriting Officer of Travelers company, which we welcomed, because when you're developing a new product, obviously, it's not just a new product here. We were developing a market for a new product, and all perspectives really need to feed in, and everyone comes at these kind of issues with a different perspective, which was really important to try and challenge our assumptions and make sure that we came up with a product concept that was going to have every chance of long-term success. I think we've done that.
Sure. And in terms of the wording and how as an MGA, how are you working collaboratively with Travellers to develop the wording, to find your sort of sweet spot?
Yeah, so I think helpfully the wording really is a evolution of a sell side reps and warranties wording. And when I say reps and warranties, it's just another word that the US market uses for warranty and indemnity insurance, and they're pretty much interchangeable. So what we did was we took that wording, and then we had to incorporate our underwriting theory into the wording, which was really the difficulty in developing the product. We have a products team within CFC that are charged with assisting underwriters with that process. And of course, how could you not take an interest as capacity in the actual wording itself? So that was obviously a central part of it as well. But in short, CFC led the drafting of the wording.
Sure. And here's your pitch. What's your underwriting appetite? What are you particularly interested in writing?
So let me just describe what private enterprise is, and that should build on what I was talking about with W&I insurance. So private enterprise is our SME product, which is of course what we're talking about. It's insuring sellers of companies with an enterprise value of around $10 million or £10 million. And therefore you could buy a policy limit of £25,000 at a minimum, which really is market leading. There's no one else that could offer such a low policy limit in the market. So as I said, it's effectively a W&I insurance policy for the seller.
Right. Okay. And moving on, we touched on sort of distribution and your broker partners earlier, but we'll just move to finish on that now. You started to talk about the support that you'd had from brokers. Give you an opportunity to shout out to any brokers that you particularly want to give a mention to. But if you just talk about also in terms of establishing the product relationship with distribution channels, that would be really helpful.
Sure. So our appetite for private enterprise parlays into the distribution that we've experienced. So we're talking about SME businesses, and generally speaking, that could be a chain of retail shops, a consultancy business, basically, I know this sounds somewhat uninformative, but if you think about what is relevant to the SME sector, our appetite responds to that. There's really nothing that would be core SME that we wouldn't do. There are certain appetite exclusions that we won't look at, such as financial services or pharmaceutical drugs and pharmaceutical companies, but then they don't really reside in the SME sector. And so, when you read that through to our distribution community, the likes of Amwins, the likes of Patrick Stroth at Rubicon M&A Insurance Solutions in California has been a huge support in really getting the word out amongst the Californian SME sector. Peter DeBoer's Blanket Hub has been a tremendous support. So I think it's brokers that see the opportunity like we do, but also have a client base that is relevant to the SME sector. And what I would say as well is, the likes of the big global broking firms that have an M&A insurance team, they are interested in it, but in some ways they're a victim of their own success. This is the busiest M&A market in the history of the world currently, and trying to get focus from global M&A brokers on a SME product at this time is quite challenging. And frankly, that's fine, because we've had enough support from non-M&A brokers with an SME clientele to write plenty of business thus far and prove the concept.
Great, that's really interesting. Well, Guss, that's all the questions from me, and that's been a great insight into the development of your product. I know my colleague Harriet Strevens has got a couple of questions that we've received. I'm just going to hand over to Harriet just to put those to you.
Thank you very much, James. Guss, the first question that's come into us is why was 2020, being the year of the COVID pandemic, such a big year for corporate transactions, do you think?
It's a good question. So 2020, that was really the start. I would say H1 of 2020 was the high point of the COVID effect, and deals had stalled. The uncertainty had completely dampened M&A demand, but the fundamentals of M&A activity were still there. They were just not being brought to the fore. And those fundamentals being a huge amount of dry powder, cheap debt at record levels, and then a massive government intervention with stimulus packages, etc., which really came through in H2 of 2020, which then underpinned what is now the busiest M&A year in the history of the world, being 2021.
Fascinating stuff, isn't it? I think you've probably answered the second question, but I'll give it a go anyway. There's a lot of consolidation in the brokers market at present, and I'm wondering whether you or CFC per se have any appetite to market this product in the broking market.
Yeah, so we certainly do. We're quite explicit about having this available for insurance brokers, which are, of course, an exception to my no appetite statement for financial services. So yes, we will offer this product for insurance brokers. We recognize that there's a huge amount of consolidation. More generally, at the very top of the market, we saw Howden by Aston Lark last week, which is quite a transformative deal. But when we talk about private enterprise applying to insurance brokers, it's kind of business as usual M&A activity, where you've got a very small agency operating in a niche area, let's say in a small part of the US that a larger agency wants to buy. That's very much in appetite. We've already done a couple of those deals.
Yeah. Well, we look forward to hearing more about that, certainly as lawyers, if nothing else. And that's all we've got time for the time being. So, James, I'll pass back to you to close down, if I may.
Fantastic. Thank you, Harriet. And thank you very much, Guss. Thanks for your time, for explaining all about your transaction liability product, and gives you a little bit of insight into how CFC goes about getting a new product off the ground. It's been really insightful and really interesting. So thank you very much.
Thanks for having me, James. Thanks, Harriet. Thank you.
Great. Thanks very much, everybody. Goodbye.